You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host. As always, this week we have one of our leaders in the real estate industry back in the studio. You know him. It's Shane Beaumont from Haiven. Shane, thanks for coming back, mate.
Thanks for having us.
It's a great opportunity to juxtapose your time today against a conversation that was a really raw one I had last week with Brooke Rolfe from Brooko Moves, the archetypal first home buyer, trying to figure it out. And that was only last week, so it'd be lovely for the listeners to be able to listen to her, relate to her, and then hopefully listen to you this week and get some really expert answers on the ground about what's going on, probably recognising a lot of the struggles as well, but then some answers that maybe I don't have myself. We'll also have a chat about the realities on a market basis right now, a good market dynamics update as well.
Yeah, it is a really interesting market, and I think everyone's got an opinion, a bit like the Australian test team at the moment. So to dive into, that'd be great.
Let's quickly go to your heartland, where you sell over 100 properties a year, which I think is a real barometer for the market, as it's experienced everything from East Coast buyers, investors, first home buyers, yips and excitements over the last 5 years especially. How's Gosnells going right now?
Extremely strong. I wouldn't say it's the same intensity it was 6 to 8 weeks ago. We're just starting to feel a bit of the buyer agent space look for other options over east. There's a bit of talk about Melbourne becoming the next hotspot, and as that can spread pretty quickly like wildfire. A lot of the eastern states investors were really responsible for the wake-up call most of Perth had, where they probably looked at their own backyard and thought, well, this sort of property in Sydney or Melbourne, what would that go for? And they just couldn't work out why it was so cheap. And what they did better than most others, especially our local buyers, they took stigma away from suburb name and looked at logistics and some of the areas that probably outperformed others. And I know at one point, I was looking at Gosnells, we might have spoken about this last time. At one point, Gosnells properties on a 700 square metre block were outperforming Belmont, Redcliffe. And I put it down to the only reason the buyer agents were seeing the airport and thinking, hang on, it's going to be pretty loud. So there were spots that you could see were just like wildfire. There were areas that were forgotten about. Like Langford, just for example, I grew up in Gosnells. Langford was always more expensive, but they get forgotten about. And the sales evidence there, same as Huntingdale, some suburbs overtook what was always seen as a superior suburb, which is really interesting.
It is interesting to take that local bias away and just look at what you've spoken about a lot, which is the fundamentals. And we've seen the same thing in Rockingham, for example. We've seen the same thing in the city of Kwinana. Suburbs like Camillo in the city of Armidale, which most people in Perth would know is probably bottom 5 socioeconomics and demographics in Perth. 140% growth in the space of a year. Now, that doesn't come from Perth investors suddenly thinking it's a great place to be. It comes from East Coast coming without bias and looking at numerical fundamentals. At some point, though, people do get to a point in prices and reflect those nationally, as you're referencing with conversations about where Melbourne is right now, and they start to ask their questions again of, is there still legs in this suburb, let alone in this city? We have those questions being asked by buyers agents locally and from the East Coast, and we know the impact that the East Coast buyers agents make regardless of what they think on local markets. But it's important to, I think, still continue to go back to the fundamentals of where things are at. Last time we had a conversation, both of us were in agreement that we would have seen stock on market grow by now. I'm pretty confident, actually, we were thinking it would be more like 4,000 by now. It still hasn't hit 3,000. What's going on, Shane?
That's a really good point. I just use Haiven Group for an example. For the last quarter, we had around, I think it was about 414 million sales take place. So the growth was there. But what was really interesting was the sale rate was almost 98% of stock coming on. So the reason I mentioned that number is because it was across Perth. It wasn't just one demographic. But for the first time, looking at what's started to be listed last month, there's actually just a bit of a gap between what's being listed and what's being sold. I guess the disclaimer is that we don't know how many people of those are going to go to market after Christmas. But I think you'll get a really good guide the first quarter of next year where we sit. But there is general sentiment from a lot of our eastern states sellers going, we can't pick the top or the bottom, but based on all indicators, if it was a stock, you'd be saying sell. So most of the stock we're seeing come on now is people cashing out. The local buyer, as far as trying to get into the next move, buyer fatigue's really set in. So they're like sick of going to home opens, especially if you're subject to sale situation. They're just going, it's too hard. And we've just started to see a few of those people put the queue on the rack. And believe it or not, that can happen pretty quickly where the market does cool to a bit more common sense. Now, we're a long way off being a balanced market, But when you're going to home open, I'll use an example. If you have 60 groups through, there's not 60 buyers necessarily there. There might be 8 or 9, there might be 15. But a lot of those people are in research mode. But for a first home buyer or a young couple going through properties and seeing all that, it can be quite intimidating. But if you actually start to look, when you get closer to Christmas, but really up to the 15th of December, you'll start to see those numbers pull back as far as attendees. The genuine buyers are still there. Because if you've sold your home, you have to buy. But you'll feel that it's not as much pressure to make quick decisions, but there will be still plenty of sales that take place.
What we know, and this goes to the point I was just referencing, is that there are still constant demand numbers coming through every week. We're still selling 900 properties-ish a week. That's a third of the stock on market. And we aren't seeing that rise in stock on market like we would like to see in sellers' season, spring selling season. We, last year, saw stock rise from 3,150 in May up to 5,500 by about this time. And we were sitting here observing East Coast buyers starting to cash out. We were starting to think, hey, maybe we're moving slowly towards a balanced market of 13,000 over the next couple of years. And then we know generally stock starts to drop again over Christmas as people hold their properties off for late January. That's fine. But then the strange thing that happened throughout the first half of the year was stock just kept dropping and dropping. But I think most of us sat here, I've sat on radio and suggested I expect to see stock tick up again, at least into 3,500 to 4,000 space, and then drop over Christmas. We haven't seen it. So we're having constant demand, even if there are maybe less offers. It doesn't seem like on the ground, especially with the 5% guarantee scheme kicking off in the last couple of months. But no more people than before, especially in that backdrop of the spring selling season, bringing their property to market. Unlike what we expected when we spoke about 3 or 4 months ago. Why aren't more people bringing their property to market?
And it is because it's gridlocked. Like the best deals, and I only spoke to one of our clients last night, they were fortunate enough that they've been speaking to us for a while, and I said, look, you're going to get a great price for yours, but most importantly, what will you do if you sell? And they had an option. The parents were going away, travelling around Australia for 6 months. I said, sell. Cash in, you know what you've got. You've got a property, they're going to go live in the family home. Now, sure enough, they find something a month later, secure it, and the reason they secured that property for a great price is not because they paid the most. They gave the seller of that property flexibility. We'll give you 3 months settlement. You can even rent back. Now that was about a 35 to 50 grand difference between their offer and the top offer. Flexibility in this market is so important, and when people start to lose confidence, even though we tell them, I've never had a homeless situation, I'm not the one who has to lay there at night going, hang on, in 3 weeks I'm out and I haven't found something. So fortune for the brave is definitely the case, but you still need to know that your family are going to have a house over there.
Mobility is still the thing restricting supply.
But I think when you talk about then the government are being blamed for a lot of that 5% scheme and what have you, and yes, it probably didn't need to be done in WA, not sure about over east, but I genuinely feel we saw the fastest ever growth from 3,100 to 5,500 ever. That's the biggest and fastest increase on record. It's almost doubled. But I really believe that was those interest rate cuts. And we did expect the rental market to ease. Now, vacancy rate's over 2%. We haven't seen a big fall off a cliff for the rental because they've still got the people pouring in. And I generally felt a lot of investors felt it was a bit overcooked in rent. But I can tell you, we're still renting properties in those areas for near on what we did last year, albeit there's not the same depth.
So last year was investors thinking,
100%.
I'm cashing out or I'm worried this is the top. And they were wrong.
They were wrong, but if you doubled your money and never been to Perth, you're not really that wrong, are you?
You're not that unhappy about it.
It's not the worst mistake you've ever made. So
exactly.
Again, picking the top and bottom is very hard. Who would have thought on the back of COVID we'd have this bullish run when the world was going to fall apart? So if the experts don't know, or you can look at the numbers, and you do need to go and gut feel. My thoughts are that 5% scheme isn't the fuel on the fire, which people think, because so many people had pre-approval. It's very rare, believe it or not, we've got people borrowing 95%. They've been earning great money for a while. I genuinely feel that the banks, what they put in place and the procedures and brokers, you had to be on best behaviour. And when you're coming to a home open, you're presenting 9 offers. The reality is, regardless of the first home buyer scheme and the LMI, if you see a property there with 80% actually borrowing 80% and 95% and they're within 3 or 4 grand, which one are you going to take?
Yeah, that's a really good point. I guess that speaks to the segmentation of the market, because I know in the house and land space, and we are doing a number of land developments at Strategic at the moment, it's had huge impacts. Stats come out from UDIA this morning actually saying that the amount of land sold in the last 2 months was more than the land sold after the building boom.
Yeah.
That's insane. And so it's had huge impacts on the house and land space with the building. But what you're saying is you don't think it's augmenting the established market as much?
No, not as much as the media would have you believe. The interest rate cuts and the underpinning, the fact that the rentals didn't fall off the side of a cliff is probably what was more important. And if you had a 0.5%, all you're doing is basically going from a pre-approval at 675 to 725. There's your growth, and that's pretty much in line with what's happened. The eastern states people that were bullish and paying overs or in the market at the time overs who have made a credible amount of money, now the local buyer is understanding market conditions, and then they can no longer be, hang on, that doesn't feel like it's worth that. They've been bruised and battered enough to know, I believe there's still growth there, and they're paying the right money now, but it probably took 2 years too long because they were trying to look at sales evidence. You hear a lot of people talking about underquoting over east, and obviously we're not as much as auction state as over there. But when you do see some from prices, and yes, there are situations where people put a from price but the owner wouldn't entertain, which you should not do, but there is genuine a sale in an area that might be 675,000. It goes to market, takes 21 days or 19 days, takes 30 days to settle, what have you. By the time it settles, at the time it might have been a blowout sale, but once that filters through the market, that's the new norm. And then they go from 675, the agent has to use some sales evidence. They might put a bit of mayonnaise on that, but they can't just make up a number. So the fact that market is dictating what it goes for because you've got 10, 15 offers, once that settles, that's the new norm. But because the market is so bullish, looking back 3 to 4 months, it's really not relevant anymore.
That talks to one of the gripes that Brooke had last week was the idea of these from prices. There are 86 properties on the market right now with 2 bedrooms or more that are not under contract, that are under $500,000. Now, most of those say from $495, from $499. Yep. And the gripe is that there's an expectation that nearly all of those will certainly not sell in the 4s, and they will not be in the low 5s. They won't even be in the mid 5s. They'll probably be in the high 5s, possibly even 6. Is good code of conduct? You're a leader in this industry. Is that the sort of stuff we want to see from real estate agents, where you're 20% out on the price?
There's 2 parts. The property should never be on the market at a price point the owner, with all fair conditions, wouldn't entertain. Now, if the sales evidence in a group, and I use units because they've moved so quickly, if the last sale in a particular group, and let's just say Rivervale, was 475,000, and that was in the first week of September, and they went from high 4s. It's been that bullish that it's going to go well in the 5s. But to go and put a property on the market in the 5s, if I was getting audited, why did you put it on in the 5s and I can't provide sales evidence? You're doing the wrong thing also. So to have it at a price point and say to the buyers, look, we would never put a property on the market with a from price that the owner would not entertain the offers. That's first and foremost. No agent should ever do that. And if you are, you're putting your seller at risk. But if you put it at a price point and you encourage offers from a price point that it is on the market, be really clear with the buyers to say, look, guys, the market's moved really quickly. This is the last sale within the group. All offers from this, the owner will entertain. I can't give you a price at this point because it hasn't even been open. But what I can do is throughout this process for the next 2 to 3 days after the home open, give you a guide on where it sits. I can't disclose what the other offer is, but I can tell you where you need to be competitive.
I can tell you where it isn't.
Yes, that's right. And people go, I want to put the offer in. I say, guys, I'm happy to present that offer, but I'm just being brutally honest. You are not going to get even a seat at the table to discuss your offer at that price point.
So then Brooke would come back and say, why? If she was looking at a property in Singleton, it was from $499, it sold for $570. Is that even close to realistic?
I would say to Brooke, if the question is for the agent, if there was an offer at $499 and no other offer, would the owner take it? And if the owner is going to say yes, because that's the sales evidence, well, it's on the market, it's fair. But if people want to be bullish and because of the conditions, if I've missed out on 16 homes and I need to find a home, I reckon I'm probably going to pay more than the first home buyer that is looking for the first time that weekend. So there's 2 buyers. There's the frustrated buyer, emotional buyer, and there's the any buyer, i.e. living with mum and dad, renting a room. Like, they're never going to pay the same amount until emotions kick in. But an agent should never have a property on the market for lower than the owner would entertain, and there's sales evidence that suggests that's what it's worth. But if we always put properties on the market, and I understand what Brooke's saying, and I fully get it, because there is, without a doubt, agents putting properties on the market lower than the owner would entertain, or what the sales evidence suggests. But the issue is, when you go to market, a lot of agents are not having good, crucial conversation with buyers. They're going, here's an offer form, send it through, best one wins.
Yeah.
The whole reason buyers get frustrated is not being transparent as possible. So we make a rule that we speak to our buyers typically 3 times from a home open to the time we present offers, because we can't build that rapport. We can't inform them at a home open. And the better agents, that's what they're doing. And even when we have people miss out, they're like, thank you so much for giving us time. At that level, we're not going to buy it, but at least we knew where we stood, as opposed to the call from a buyer going, I would have gone to X, and then they find out it would have gone way over. You can have that chat earlier.
So her reality is she's a first home buyer. She's been looking for a year. She's put one offer on the market. She's got help from her parents. She wouldn't want to go over about $500,000, which makes it tough for her in this market now. And she hasn't had a formal approval for her finance for a while. If you're aware of that as a selling agent, are you honestly giving her much of a look in at this point in time?
We will present all offers and give all feedback, but again, if you were the seller and you've got the luxury of having 7, 8, 9 offers, and I go, this person has a lapsed pre-approval, this is the situation, they're buying obviously the high end, an owner's looking for the de-risk their situation. So whilst, yes, she might be able to get finance, why would an owner risk in this current climate when the prices are all about the same? And that's what makes it really hard. But I can honestly say that there is so many sales on the market that happen for a price. There's also the off-market deals. Now, off-market deals, I don't believe off-market should be for every property, but there are situations off-market suits, i.e. some owners are very lovely, they don't want to disrupt tenants. So they say, look, this is my number. If it's around that, I'm willing to go. Even though, Shane, you're telling me I can get more, I'm willing to go around this level if the tenant gets to stay on. Happens a lot more than people think. The second one is emotional situations, divorces. When I sold my mum's property in my core area, she was like, Shane, I don't want home opens. I said, Mum, I think you should have home opens. Shane, I don't want that. I got her 4 offers, didn't go to market because I had the database. For my mum, she felt, maybe I did leave a bit of money on the table, but for her situation, the emotion overrode that. She was willing to do an off-market deal. Some of those buyers, we know that they've been like pestering us as agents.
The lovable pest.
I can promise you, we don't see it as being a pest. We're the forefront of our mind to find a property that suits that buyer, and that's where some of the best buyer agents come in. They ring every scenario and say, Shane, I'm willing to give any settlement, any condition, any home. This is what I'm looking for. And when they pop up and you put it through the funnel, and we all typically have funnels, you can actually see who it suits. When you know that they've got that flexibility and you pitch it to an owner, price tends to go out the window a bit because they're going to be paying market. So it is really important. The other thing I just want to also note, what a lot of people don't know is a lot of the portals actually rate you as a buyer, believe it or not. So when we get an inquiry through, it'll actually almost say out of 10, how you actually act as a buyer, how you interact, how many buyers you inquire, all these sort of things. Sometimes, rightly or wrongly, if you're really active, ring the agent, send emails, interact, I don't doubt your score will be going higher, and agents are aware of that. Now, I'm not saying all agents, but some of the lazier agents, if it says there's a buyer that's a 10 and there's one that's a 1, you may not be getting the same attention.
So let's try and solve her problem for her. So those are her realities. I think the first piece of advice is get that formal approval update. You hand it out like it's an election flyer. That gives the selling agent some confidence that you're prepared and you're not as much of a risk or any risk to your client, firstly.
100%.
Second one would be confidence, I think. Personability. My advice to her was, if you can't compete in the quantitative side, compete in the qualitative side. She has obviously a very amenable personality, a likable person. That works with agents a lot of the time, right? Not always just money. It's about solutions.
And for sellers too. That's exactly right. Some of the best young buyers have, whether they've spoken to, have been given great advice. We've had cover letters with a pre-approval with their situation submitted with the offer. Now, it might sound crazy, but it actually does work when you explain it. One thing I say to the genuine buyers in the marketplace, say to the agent, Mr. Agent, can you promise me you'll at least give me the last opportunity to chat to you about this offer before it sells? For an agent to say to a buyer, no, I can't promise you that, really they should. Because if you're telling me be the last buyer to chat, I think it'll make it worthwhile for the seller. We work for the seller. If you're a seller and you didn't do that, you'd probably be pretty disappointed.
You want every stone turned, right?
Right. So be really clear. Guys, I like this home. I think it suits me. I think we can make it ours. I understand you've got lots of offers. Here's my letter. Here's my pre-approval. Let us at least have a chat before this property gets sold. Have that conversation. The better agents, I can promise you, give you a call. Now, if it's out your price range, at least you feel it's a bit more on your terms as to being in the dark and not actually knowing. It does work really well.
My other advice piece was, and I was thinking about you when I gave this, was to essentially become a follower, a friend nearly, of top agents in the area who are selling 3 or 4 properties a week. And her rebuttal was, if they're selling so many, they'd never think of me, they're so busy. I should speak to someone who's not that busy. And I said, actually, you want to speak to the person who's the busiest because they've got the most opportunity to solve your problem for you.
So right now, if someone sends an inquiry through, I'm with you. In my team, I have Jack. He'll call you right now to say, g'day, Shane's an appointment right now. Here's the information you need. Can we help with anything? So the better agents that work in teams, so he helps me, they can service more and quicker and build rapport. So we get a hot list of everyone, who the hot buyers are. There's agents out there at the moment that are doing home opens by themselves. They're having 100 people through. How can they possibly genuinely be being the best version of themselves? You're actually not in there hearing those conversations.
And they're only selling one property a month. How are they able to solve your problem?
They can't. So the better agents, and I've seen some of her footage, like with Mark's a great agent, Mark Rogan. Now, Mark, he's got people in his team, so the level of service, as busy as he is, doesn't fall. When a lot of agents go through that growth in this market, they can't handle it because it is so full on. You wake up in the morning, you've got 120 inquiries. That's before you've spoken to anyone else. Now, there can only be one buyer. So the busier agents have typically better processes and better levels of service because they have the systems in place. They're not just winging it.
The next rebuttal from Brooke, which I think has led to a lot of her procrastination, has been that in her circles, half of the people have bought property and said, look how smart I am, I've made 200 grand in the last few years. The other half, more risk averse, negative forecasts about the future and the industry, and have said, just wait, the market will drop. And then you'll have a chance and you won't lose money going forward. And she says, Trent, with my information that I have, I don't know who to trust. I don't know whether I should trust Trent and people like that, or trust my friends who are pessimistic about the future. And therefore, I'm not going to overpay $200,000 more than I think a property is worth. What are your views on that conversation? Because mine was, you're buying a home, you're buying a long-term asset. If that property that you bought for $500,000 this week was suddenly worth $450,000 in a year and a half, would that be the end of the world if that was your downside risk, if you're looking to hold this for 20 years? Compared to the risk of having what you've missed out the last 12 months. What were your thoughts behind it as well?
So there's two parts. One thing is, and you said it, you actually mentioned it, what she felt, or that buyer feels, is 200 over value. But if there's 19 offers on the table at that price point, that is the market. So the reality is your perception of value isn't in line with the market. That's first and foremost. And I'll be honest, there's agents that we see sales take place, we're like, that is crazy. But I can also say 6 months later, that was a buy because it's been so bullish. So you're never going to pick top or bottom, but I guess you need to look at the indicators. The market to stop or turn and retract right now, there is not one indicator that would suggest it's possible.
Yeah, and we're not talking likely, we're talking possible.
Possible.
Yeah.
Like possible. Because no, you can't build 15,000 homes tomorrow. There's no way in the moment, even if with young buyers, for them to buy a block of land and then build on it and live somewhere, it's bloody hard. So the building side of it, yes, that we encourage it and we want to see that, it's just not happening. That's why Established obviously had a very bullish run. So trying to pick the top or bottom, don't do it. You are going to typically hold the property for long term, ideally. Yes, you've made fast money in a short amount of time, but I use that example we spoke about off there. You can never pick the top or the bottom. And if I look at 2014, we had a property which sold for $425,000. They renovated it, spent about 80 grand. So you're up to around 500 plus stamps. I sold that very home for $325 in 2020.
So they banked a loss.
Banked a loss to buy in Canning Vale. They're like, Canning Vale's gone down. We see that. Yes, we're burning money on this house, but for us to get into Canning Vale, we don't know when we'll get that opportunity. Now, that property today, I've just appraised recently at $750. So if you look from 2020 to now, you go, wow, that's been pretty good growth. But if you actually work it out from 2014 to now, you probably wouldn't have brought it.
Yeah, the growth sits at less than 5%.
Yeah. So if you're paying 4 or 5% interest, you probably wouldn't have done it.
Yeah, and it talks to both sides of the scenario, right? Then if you don't want to take the risk of owning an asset that might be worth less in the future that you may want to sell for less, don't do it. No one's obliging you to buy a property. You can just rent. But it also talks to, I guess, that other side of the conversation of, oh, it's been so hot, it's not sustainable over the last few years. But actually, if you expand it out over a 10-year cycle, it's actually
we're probably due for growth.
We're due for more growth because we're still actually below long-run average growth numbers.
Yeah, and again, the Eastern States investors and the buyers agents, you must give them credit. They didn't get so caught up on the macro. They got caught up on good infrastructure, demand, how much supply of a certain product. Like they actually did research. There were some Uber drivers that were acting as buyer agents, don't get me wrong. But there's some great guys we deal with every day and we speak to weekly. I've sold properties for them. They know what they're talking about and they pick these trends around the country. But there's also some cowboys out there that have no idea. So you do have to be mindful. But in answer to your question, no one's forcing someone to buy. If the market stays down and everyone can move around, it's actually not too bad. I actually prefer a weaker market than now because, yes, I do believe we can really impact on the sale price, even in this market, probably even more. But in a market that's not as buoyant, you are seeked out more because you're experiencing your results as opposed to anyone. So we actually, people go, oh, you must be killing it at the moment. We prefer a market with 12 to 15,000 any day of the week. And you'd struggle to find an agent that wouldn't think that.
Yeah, it's a cooked market right now in many ways. Let's quickly look forward then and give Brooke some confidence if she's thinking about still buying. Where does the market head in your price points from this point in mid-November over the next 6 months period, and maybe that gives her a bit of confidence or even a bit of a kick in the bum.
Yeah. We just had, for example, 2 properties that I sold 2 years ago to an agent from over east who followed me on Instagram through Tom Panos training, I think it was. And he's like, Shane, that market seems pretty good. What can I get for under 250 grand? He bought two bedroom units about 24 months ago. We've sold them both for just under 400,000, and he hasn't been to Perth. We've sold them. So there's 2 properties that I know if you had 400 grand, you probably would have brought. There are properties coming up, but they are well sought after. What I would say, a lot of the buyers agents, if you are looking strata, complexes, buildings, older, a lot of them are not really pushing that product. They'd rather land holding, retain and build subdivision. So stuff with a bit of land, you're probably going to compete with a lot more. But and I've said this a few times now we've been on, that unit space, if it gets you into a market you want to be in a better area, the growth of the area should be the growth. To build those properties now, those 2-bedroom, 2x1 units, you couldn't simply do it for the cost of what them being on the market.
So there's still inherent value, even at the prices we are now in the unit space.
Yep.
Are there units around Perth that you can buy still for $500-ish thousand?
There is that you can buy in Wembley for around 500 grand, believe it or not, some of these units. No, it's not looking over the lake. No, it's not 31 course ceilings. But at the price point you are, you'd argue there's pretty good value there. So there is. The ugly ducklings are the ones that I think you really you'd find value. You spend 5-10 grand. You don't have to do it straight away. But a paint, some ready-to-hang curtains, like they freshen up really quickly. Even if it's a hybrid flooring, we're blown away by how quickly some of these investors see the ugly duckling, say, look, that'll take me 2 weeks. And all of a sudden, if that was presented like that in the market, they would have got 20 or 30 extra grand the owner, but they're like, look, I've doubled my money. I don't need to. I'm done. I'm getting paid by the tenant to the day of settlement. So there is still some good value out there, definitely. I can't see a situation where that sort of product isn't going to hold up or keep performing, which is also important.
And last one, let's try and close her channel out.
Yep.
I want to help her find a property because I listened to that episode 3 times after I recorded it, trying to figure out where could I have done better. And I think it's all about action. So what I want to do is put a challenge to you, Shane, to help Brooko Moves with her 30,000 viewers get herself a property in the next few months. What do you reckon?
I'm happy to speak to her.
Yeah.
I've seen some of the footage, some of the ones she's been looking at. If you did buy them, you could certainly do some improvements. But happy to help in any way I can. Yes, it is tough, but there is always one lucky buyer. But without a doubt, for young first-time buyers, including Brooke, I don't know, she probably does have some rapport with agents. The squeaky wheel gets the oil. I genuinely believe that. So don't give up. Buyer fatigue will sit in over Christmas. If you're living with mum and dad, or you're renting, or you're an investor, over Christmas, you typically do not need to keep looking. We'll sell properties on Christmas Eve. It doesn't matter for people that must act. So if you can keep through that Christmas period, competition will die off, and you'd be surprised how deep into the month deals are happening.
By Christmas, are there more or less properties on the market?
I think it will sit around 3,000 because a lot of people simply won't come to market. It's not a true reflection of the market conditions.
Yeah.
Crib Creative, who's one of the Perth's leading marketing companies, they've had a record months for shoots. That hasn't flowed through to being on the market yet, so it's fair to say a lot of people are getting things ready.
So there could be some stock.
Without a doubt, there is stock coming. We're just now this week, so I've listed 4 that are not going to be launching until the new year.
There you go.
Now, the reason is, I've said to the owner, in any market there are always buyers and sellers. But if the target market, i.e. retain and build property, has investors and it has first home buyers, people that do not need to act, I'd rather put the property to market when the whole market is firing, i.e. end of January. I could sell it on Christmas Day. I genuinely could. But when you look at me and say, Shane, is this the best the market's willing to pay? And I say only 35, 40% of the market's active, doesn't really create confidence that it is the best price. So people will push the button because their situation, they do want to sell, and that's fine. But a lot of the people are going, look, I'd rather fire when you say it's the right time to sell. And yeah, it is. A lot of agents do also want time off.
Yeah, exactly right.
They do want time off. It's been a brutal year.
Every year we get to this point.
We're not saving lives or anything like that. But it is an important time when you are working the hours they do to have some time with family. And I personally wouldn't want strangers walking through with a few presents under my Christmas tree. So it's a good time for everyone to have a break. But inquiries on Boxing Day, and this is realestate.com data, is through the roof over that period. Inquiries. Not necessarily sales, but inquiries. So there's still plenty of conversations that take place over that period.
Are prices higher at the end of the year than they are now?
Without a doubt, yeah. That's the lag in data. So today's
But on the ground, if you're signing a contract for a unit in Gosnells now versus Christmas Eve?
Right now, it is at proper boiling point on pricing. I wouldn't be surprised to see it stagnate in reality to the new year and then get firing again. But unless a huge amount of stock comes to market, and I mean 2,000 to 3,000, it's going to remain very tight for a while.
Shane, thank you so much for coming in. Thanks for your contributions this year. A record amount, I think, this year as well. And I'm sure it will be very interesting for us to see how you're going. Perfect. Helping out Brooke, but also with the general market data and realities into the new year.
Cool. Thanks for your time.
Cheers, mate.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!